Everybody, it's Bill with Franklin Loan Center, and it's Wednesday again. It's what's today, the 11th? Yep. No, it's the 10th. And this is the day we've had marked on our calendar for a little bit. It's today's big economic report was CPI, or Consumer Price Index. And it's been, kind of, we had high hopes for a long time that it would be that's huge number that would become a pivot point in the whole inflation thing. And so didn't come out. We got a little bit of a scare over the weekend because both a couple of big ones like Chase and geez, who else was it? Goldman both came out and they were kind of talking about how that actually it looked like this might be the first month in 10 months where inflation might have ticked up month over month. So fortunately, that did not happen. It came in just a little bit lower month over month, which now makes 10 straight months in a row of inflation coming down. So that's a good news. I think the really important thing to point out, and again, I get all this information from MBS Highway, and it's that this housing, you've heard me talk about this, the housing inflation, that's 43% of CPI, and they have some crazy calculations in there. But long story short, as that number does appear to have crested now, it's a major lagging indicator. So it's finally on the way down, it appears, and this should really start to help inflation, which is going to help interest rates. I mean, again, to be clear, we maxed out on this number at 9.1%. Today's read came in at 4.9%, and the target again is that roughly 2% range. And it looks like it could start to see some pretty significant moves over the next few months. So I think what does this mean for real estate? Well, inflation comes down, mortgage rates will follow. No questions asked, it will happen. And then, the other thing, and this has been my warning for a while, is, we're already seeing housing prices start to tick up again because there's just such minimal inventory out there being met with more and more buyers. So I just can't stress enough that right now, if you're thinking about buying this year, you might have your best opportunity right now. Because I think if these rates come down, it's going to create a huge frenzy. And I know I'm sounding like a broken record on this because I say it almost every week, but that's what's real. I mean, and we're already starting to see it, and rates haven't even really come down much. I mean, we're still kind of hovering in the mid sixes, somewhere in that ballpark. Depending on obviously all the normal stuff. And if that starts coming down the way we're thinking it's going to come down into maybe the fives, maybe even the low fives, then you can imagine the frenzy that it's going to create for buyers, and that is not going to be good for your opportunity to get yourself into a house, particularly if inventory levels stay at or even close to where they are, which is kind of what's being anticipated. So just throwing that out there again, the warning sign, this really does look like it could become like the pivot point, so to speak, for for inflation to really get back down into the range where the Fed wants it. And then I think, from there, it's going to bring mortgage rates with us, and it's going to make it very difficult to get negotiated into a house. So that's my 2 cents on the market for today. I am Bill. I'm with Franklin Loan Center. Please like, share, comment with anybody you know that's thinking about buying. It's very important. We'd love to have them on the mortgage front. Again, I'm Bill. I'm Franklin Loan Center, and I'll see y'all next week.